You're watching today's video technical update presented by FXTimes. It is Tuesday, August 3rd, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The US dollar is plagued with further weakness across the board. I'm monitoring many dollar crosses in order to make sure there is a confirmation when the US dollar does rally and rebound. This is like looking in the internal structure of the dollar index. I believe the main crosses to be monitoring are the dollar yen, dollar Swiss franc, and possibly gold, but we also want to see the Euro and Aussie, for example, cool off against the greenback before considering the comeback. This video is being produced at about 12:15 p.m. Eastern Time during the US trading session. The first pair I'm going to look at is the dollar yen. Now I believe it's important to look at the yen, the Swiss franc, and gold because they sort of compete for the same currency flow, in risk aversion. So if the dollar were to come back and rebound, then it should rebound first against the yen and gold and Swiss franc. Otherwise, you might want to look at another currency pair to be the counter currency. Traders are looking for the dollar to rebound because they believe that it's overstretched, the weakness is overstretched, overextended, and a reversal could be sharp. But at the moment, you see here, dollar yen is still bearish. The yen is still the stronger currency, and so here we have this negative reversal projection from earlier this week or end of last week, and it's materializing, going down towards 85, basically getting into this zone here. Okay, so that's dollar yen. So until this breaks above our trend line here, for example, the yen is still considered stronger than the dollar. Now looking at dollar yen in the 1 hour time frame, we see further confirmation of weakness. So again, dollar recovery is not imminent yet. So we'll continue to monitor the dollar yen, see if after this projection, after this target, if the market will support the pair, and if it could be strong enough to come back and go back into this consolidation zone and break above that. Then we could consider the dollar recovery if the greenback is also strong against the Swiss franc. Another pair is the Swiss franc, which we see here, and again you see the market continues to be dollar weak here, and the Swiss franc continues to hang on to its gains, although we do have some indication that the decline has paused and is looking for a bottom because the momentum is rising, even though the price continues lower. So for the dollar Swiss franc, we want to see it break above our 200 moving average in the daily. Then we would consider the dollar to be rebounding. In the 1 hour time frame, just like in the dollar yen, we see here the RSI came up, tested 60, again continues to be bearish, although we seem to have be supporting here just above 1.0350. Although again, you want to see this pair break above these moving averages. In the 1 hour time frame, you want it to break above both of these moving averages. In the daily, you see in the long term, we're pretty much consolidating in the sideways action. So the moving average here doesn't tell you much, except that there has been some recent bullish action, which now is brought down lower here by this bearish action. So the 200 moving average seems to have here supported the market, and here now acting as resistance. So again, if it breaks above the 200 moving average, dollar recovery has better probability, has more bearing on it. Here's a daily look of gold, symbol XAU, USD. So here we've gone to a historic high and has since sort of stabilized, but we are in this consolidation. So the gold is still strong. So when we see gold falling further, then we could also give more bearing on US dollar recovery. And we see here possibility of actually gold continuing further if the market is supported at this 1130 or 1129 area. Now, right at the moment, we have this projection. Okay, the market has found itself in the channel, testing the channel resistance here. And what you see in the RSI is a slight break below 40, but it's not convincing for a bearish outlook yet. It's basically telling of a ranging mode. If the RSI comes up and fails to break above this high and dips, while the price level, if the RSI does match this high or break it, but doesn't break 60, and price level doesn't break this previous high, then we still have some further bearishness in gold. So, but for the dollar recovery to again gain even more traction, we want to see this break below the 200 moving average and sustain a decline. Otherwise, gold would just be sort of hammering or still trying to top off. So basically look for a break below this 200 moving average and a sustain or a confirmation in the form of a pullback, and then further decline would give the US dollar recovery better chance. Moving on now to the Aussie dollar pair, which has been strong, but you see the RSI here has not broken above 70, so far it's still indicative of a ranging market in this longer term, and it could still reach 0.94. Okay, so that's sort of the target at the moment if this is bullish in the short intermediate term. See, in the longer intermediate and long term, it's sideways. Now, we'll get better clues from the market in a lower time frame. For example, here's the 4-hour time frame, and we saw the market actually here we have possibly 1, 2, 3. We may be on wave 3, and also we may be in 1, 2, 3, and then we may have to finish 4 here first, and then 5 to reach this 3. Now the 0.8850 area has been shared as the point of these wave 1s. 1 here, 1 here, 1 here. So that should be the support, the furthest the market can decline to for this count to be valid. So if the market breaks below 0.8850, then this count is not valid. But if the market starts to decline, it could still find support at 0.8850 and rally towards 0.94 to complete this wave 3. So that's one possible count. We do see bullish action. We see this RSI, this moving average here, break above 50, break above 20, and here supported again. So orientation of moving averages is bullish in this 4-hour time frame, as well as the okay, so it's not in the daily time frame, but you definitely would see it in the 1-hour time frame. Okay, so basically at the moment, what we should be looking for is seeing of this consolidation, if the market will break above that. If the market breaks below this consolidation, then look for it to come down further here. However, the more likely scenario is a sideways kind of action until a break above, and I'll be looking for it to go to 0.94. Okay, but at the moment, we don't have that confirmation. Look for the market. You see, it's giving us some short-term bearish implications, so that it could continue lower. Alright, so that's Aussie dollar. Still, we don't see the dollar strengthen yet, but if the market does break below this 0.8850, then the dollar may have already started its recovery. Finally, a quick follow-up of the euro dollar and the pound dollar. Today, the market continues higher, so nothing surprising, but we are right here at the point where we would invalidate a bearish outlook, and a decline would be expected to be supported somewhere here. So if the market does break above 1.3250, then I wouldn't expect a very strong reversal. I would expect some short or temporary reversal and further rally. Pound dollar has already shown You see it broke above this high here, broke above your moving averages, broke above this trend lines, and now broke above this power line. So very strong. The pound dollar is very strong, and more likely than the euro dollar, it could continue higher. So it appears that, dollar recovery, as far as looking at the pound and the euro dollar, is not imminent. That wraps it up for today. Make sure to check out www.fxtimes.com and register for tomorrow's Charters Corner strategy session. Instead of a video update tomorrow, I'll be running a live 1-hour-long analysis webinar. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.